Hi everyone, welcome to another Learn, Grow, Invest meeting. It's very, very good to see you. I know we have a few persons waiting here for us to begin, so thank you for waiting. I saw a few persons as early as about 6. Definitely thank you for your support and for just being here on time, because we definitely like to start on time. So thank you for being here. We have the pleasure today to talk to, we're talking to two persons today that I think will make for a very interesting conversation. I know this is a meeting that is, a lot of persons have been saying that they're looking forward to as well. And it's the same on our side. So if this is your first time here, I'm Jermaine McDonald. I have Lisa Marie Knight with me. We are, Lisa, are you an admin? Yes or no?
I'm an admin adjacent.
So Lisa and I represent the Learn, Grow, Invest community, and we are 3 years old actually this month. So this is a very special month for us. We have had many meetings up to this point, and since COVID we've been able to meet online, which is actually a benefit because we get to extend our meetings out. We have the opportunity to connect with persons all across the world. I've actually seen some persons connecting from the US, from the Caribbean, so that's pretty cool. And we are just here to really help build financial literacy, to share just tips and strategies for you to be successful in investing. We're not here to promote a particular style or way of investing. We actually say we want to just provide you with the information and you choose what to do with it. So that's what we're here for. And welcome. Typically we open with a word of prayer, so I'll do that and then we'll jump right into it. So let us pray. Father, we thank you so much for this day. We thank you for the opportunity to see another day. We thank you for the opportunity to learn and grow as an investment community. Father, we pray your presence will be here with us. We pray that this discussion will be engaging, will be exciting, and that persons will learn and grow as investors as a result of it. We pray your blessing on this time in Jesus' name.
Amen.
Amen. All right, awesome. So Lisa, I'm going to hand over to you. And I'll be back later.
Thank you, Jermaine.
Cool.
So good evening, everyone, and welcome to another edition of Learn, Grow, Invest. Today is very, very exciting. We have two guest speakers that we have been talking about trying to get on our platform for a while now. If you have any questions for our guest speakers, please feel free to put your questions in the comment section and we will get to them during our question and answer segment. So without further ado, please let me introduce to you. First, we have Mr. Danai Hall. He is a risk analyst. He has 4 years experience in various finance roles across the local investment banking space. His love for math encouraged him to attain his degree in actuarial science. There's a theory about actuarial scientists from the University of the West Indies, which planted the seed for his love for finance. He considers himself a new investor. Having started in 2017, he works at Bayberry Investment Limited for his 9 to 5, and his personal time manages his personal equity portfolio. He is the co-host of the very famous finance podcast Earnings Season. Hi, Danai, welcome. So our next guest is Mr. Controversial himself, Mr. Randy Rowe. And Randy, I'm especially excited to introduce because after reading his biography, it opened my eyes to a lot of things. So Randy is a self-taught equity investor, which I'm pretty sure is going to interest a lot of persons. He's also a strategy consultant. He enjoyed a colorful career start in corporate Jamaica, where he worked for a little over 8 years at Carreras. He covered his role in IT help desk. Don't think I saw that one coming. He went to marketing, also a business analyst. He stopped there. Then he went to audit, sales admin, receivables management. Do I have that right?
That you do have that right.
After leaving there, he covered roles of the marketing and sales manager of FMCG. And then he went driving for Uber.
I've done a lot of things. Yeah. Like me asking the Uber was real.
Okay. These days, he works as a business consultant and he manages his own private equity fund. He also runs the also very famous everymickle.com, which he founded in 2012. So, gentlemen, welcome. Thank you so much for being online with us. It is very, very exciting. We've been wanting to have you guys online for a while. Especially because, you know, we always wanted to get the opinions of the founding members of Finance Twitter JA. Unofficial founding members. Sorry? I'm not hearing you clearly. Say that again. Oh, you can't take credit for that one. Okay.
Yeah, I'm not sure what the founding members said, but I'd love to hear when you tell me. But thank you. I'm really happy to be here, Lisa. Of course, Dana and I talk all the time, so it's all hard for us. But yeah, it's really good to be here. It's a different audience, a different thing. Yeah.
So tell us. Let's start with the psychology of an investor. Because both of you have different backgrounds and you started from different ends of the spectrum. Because Randy, you were self-taught, while Danai was math inclined and went into actuarial sciences. And it's interesting to hear that you both were able to find your path and get into investing and get into both managing your own private equity, yourselves, as opposed to going to the quote unquote, advisors. So I want to hear from each of you how you really got started, not just like from you reading or of something, but how you got started and what you learned from that taught you the psychology of an investor.
Randy goes first.
Well, thanks for the setup, then. I don't know if I describe my own journey quite that way, but it was self-taught, and I think I put a lot of emphasis over the years on it being something that's known that can be self-taught, right? And that is something that has always resonated with me, right? And of course, the being self-taught is great in that one. I mean, you save money, you save time, you get a deeper understanding of the things also. But on the flip side, there are certain things that you end up teaching yourself. It's like learning to cook by teaching yourself, right? A lot of the mistakes along the way are the things that you do, and there's sometimes some little basics that you can get very, 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 very far along the road and never ever learn them until much later, right? And the psychology is one thing, because that's still something that I look at every single day. I deal with every single day as part of the investor journey. And being self-taught means that you can do pretty well, and then you think one day, wait. One, you find yourself not doing things that maybe if you'd known them you would have done, and then on the other hand, you find yourself having solved problems that you didn't even know were problems, because if you don't go along that path, there are many problems that if nobody told you it was a problem, you don't know. It's like if you don't teach a baby about racism, they never grow up knowing about racism, right? It's sort of the same way. So the psychology in that is very important. But I don't know if well, like you said, Danai will speak on his own journey as whether or not it helped him with that, because you're right, I never thought of it, but you would have done some amount of learning while being an actor, right, Danai, about the market and so on.
Yes, I get some knowledge from school, like in classes, there's some structure around it, but in terms of the actual practical investing, very far removed. It teaches some equations, risk. I always put in quotes risk based on how they teach it. But in reality, when you actually go out of the classroom and start investing for yourself, it's a very different ballgame. Actually, one of my teachers, Miss Boswell, Kim Boswell, she pushed me in the direction of started investing. And she was one of the first persons to tell me that, well, I teach you this now, but in terms of how applicable it is, there's going to be some level of difference between what's actual reality versus what's on the chalkboard. So,
I teacher told you that.
Yeah, and she's an accomplished mathematician, and she has some leeway in the actuarial field. So, I think she knows what she's talking about.
Yeah. Actually, yeah, she's pretty good. She's
God
pretty
bless
good.
teachers that teach.
That's true.
Indeed.
So my first question is, how do I develop the investor mindset?
I think everybody has it, actually. The investor mindset, when I say the investor mindset, I say it like that, because I don't think there's one specific rigid mindset for everybody in terms of their personal investing. But the general investor mindset is I want to put money somewhere, and that money does something where I don't have to be the one doing with the money, right? I'm not managing a shop per se. I'm not behind the desk selling the tea or whatever at Jam Tea, but I put money in Jam Tea, and Jam Tea does its thing, and it's valued more later on, and somebody buys it from me, or I keep it and pay my dividends, right? So the investor mindset is I want to sit back, relax, watch the show, right? So I think everybody has it. I don't think there's one person that says I don't want to have a money do its own thing by itself. I do something somewhere else. Everybody wants to work for their money and then have the money work for them later somewhere else. So I don't think anybody's missing on that mindset. I think where they fall is how they execute it.
Yeah, I agree with that. It's very much something that I have always I've tried my best to always put people away from this investor mindset thing. In fact, as the other night I was doing some working on my website, L.E.A.R.N, and I realized that I had an old post I was sharing with somebody, because I always share the same set of articles with people when they're just starting out. And I realized that when I was writing the post, and this is 2017, I published it. It was called Thinking Like an Investor. And I only know that because in the title, not the title, but in the address, it says Thinking Like an Investor. But I remember that I changed it deliberately to how many shares should I buy? Because that is the actual question that real people come up. That is the investor mindset question. They're one of the first ones anyway. Other than, how much start, which broker is the best, what must I do, which stock I must buy. Once you step past those and you start kind of getting it.
Oh, how much am I supposed to start with?
It comes in many forms. So I wrote this thing called Thinking Like an Investor Thinking. And I remember I changed that. This is 2017, like I said, and I changed it deliberately to how many shares should I buy? Because that's a question I get all the time. And I started it off with, I'm looking at it now, I started off with the same thought of question, just like you said, how much money should I put in this company? How long should I keep the shares for? How much should I invest? Blah, 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 right? And answering that question is actually the real getting into.
Yeah.
Exactly, real getting into the market, and understanding the mindset, right? And answer is usually how people think. It's as much as you want.
Yeah.
Okay, so I think Jermaine has posted a link to Evermickle in our chat. So for those of you who want to join up with Randy, feel free to do so. I think Randy is very encouraging because he is a non-finance person who is in the public eye, making waves and teaching others how to learn about investing and how to invest. So what are the different perspectives that you think investors have?
I like that intro so much better than the first one. And then I make you do that one first. I make you answer that one first. Lisa, can you ask the question again? Sorry, I just so why didn't you give me that intro? It's a much nicer one.
what are the different perspectives
Uh-huh.
that investors have?
So generally, I say generally, but there's a wide range of perspectives.
Mhm.
Everybody wants something different from their returns. They want something different from their investments. So they go in with the idea, some want dividends. They know what they want specifically. They want dividends, they want cap gains, and some they don't know what they want. So they look at it and say, all right, I want income from an investment. I want to live off for them. I put money there and it pays me every now and then, right? So you find that I think that's a better place to start, knowing what you want generally than going in and saying, boy, I want some stocks in, I want some bonds in. If you start at what you actually want from the investments, then it leads you to where what you're going to buy. So the different perspectives are generally led by what people actually want from the investments that they make. So you have people that want income, you have people that want, boy, the money can do something at the end of the year. They can buy a car, they can pay the student loan, something like that. So different perspectives of investor, it's generally led by where the vehicle can bring you, and you start there versus I want stocks, I want bonds, I want whatever other investment product, I want unit trusts, right? So it's very hard to say what are the different perspectives of investor because almost everybody is different.
Yeah, I'm with Dana on that. I believe strongly.
Non-answers, like
Yeah, no, it's not a non-answer. It's not a non-answer. It's not a non-answer at all. The reason I think why it sounds like that is because you hear investment. That's the thing. It sounds so airy-fairy. People want it to be up in the clouds. You need a nice technical sounding answer, right? And the things, and to our detriment, there are a lot of little things that have been put together to sell that lie to people. You know, so I could answer and say, well, you have maybe 10 general investor types, and you can knock down to 3 investor types. So you have you want people who are looking for some safety of capital. They want capital preservation more than anything else. And then there are other people who maybe want a cash-based income stream, and those people might look for the more regular bonds or the quarterly paying dividends. Or you have the people who they're looking for aggressive cap gains, and so those people, you will call them the day traders and blah. But you're lying. But that's all, it's a nice sound lie.
Fill in the box and then sell you the box. And
exactly.
Don't tell you what's in it. Just say, this is the box is right for you, and here's the box, buy it.
And you can't figure it out. You need to do it. Just pay for the box and I'm going to run it great. Trust me.
Yep.
And there's nothing wrong with that, because a lot of people do run the box great. They're great. We look up to a lot of them. Warren Buffett is Warren Buffett because he runs a hell of a box, right? But if you're starting out, even if you're going to be handing your money over to one of the boxes, you need to understand what is happening in the box, if only for the sake of your money. Yeah, if only for the sake of your money, you need to understand what's happening in the box. And so then I was saying him answer so kind of airy-fairy, but it's because it is the truth. There are as many investor types as there are types of people, right? So however you want to set it up, if you want to say,
how do I know what investor type I am?
That's a nice question. Yeah, what do you want? Yeah.
I want money. Aren't we all in this for the same thing? We want money.
No, we're not. Yeah, no, we're not all in this for the same thing. There's somebody watching this right now who is in it because they want to learn how to put together some money for their children's future.
Money. So that's still the end goal is still money.
No? Because Danai might want money.
And I don't want money?
So hold on, man. It's not the money. That's where you can't get lost with the money. The money is often used as a shield to hide the details. Step past the money. Somebody's watching this because they want money. I saw Miss Julie say, I saw Jillian say hi earlier. Big up Miss. Who should big up that?
Big up Miss Jilly J.
Yeah, Miss Jilly J. And so I know she has children. So how she would invest for her children is completely different from how Danai might invest to be able to sell it in beaten in paycheck, right? Danai can cash everything out and put it all on, I don't know, whatever stock, right? And he's okay, him sleep that night fine. While Jilly might try that and she can't sleep because When the stock dropped 10%, then I smile and buy some more. When the stock dropped 10%, she can't go to bed that night. She can't sleep at all, right? And so it's not the money that you care about, because we all want money, but we don't really all want money. Money itself isn't, I don't know those people.
What does money do for you? What does the money buy? That's what you think about, really. You don't get up and think, boy, I want $1 billion because I want $1 billion. You want $1 billion because you want to buy the private jet, you want floss, you want buy a yacht, you want party, you want what the money can buy. You don't actually want the money for the money's sake.
And what you want is very often dictated by your life, your lifestyle, where you are, all of those factors. So we don't all want the same thing, right? You would think we all do, but we know we don't all. And I know that for a fact because, and lots of people watching this, I'm sure, also know that for a fact, because when you put somebody in a situation that they thought they wanted, they didn't, you see very, very quickly, right? I do this class and I called Grow Up, the investor workshop, and I tell the story at it all the time. And I'm saying it now so that it will remind me not to ever tell it again. Well, I have a brethren who, I hope he's watching this. Our brethren who called me about a company, that IPO, one of the popular IPOs, right? And him calling me, first of all, him calling me after I invest the money. And I must tell him whether or not it's good. I say, you know that already, I'm not advice, I can't tell that. He say, yeah man, but here one of them puts in, right, blah, blah, blah. Him actually called me and say, it good? Not even hello, it good? It was a popular enough IPO that I know exactly what he's talking about. I hate that. So what's good? You know what I mean, man, cut the foolishness. It good or not? And so what you mean by it's good? And so well, him just put in a lot of millions for him, his savings in it. And he put it in, and then he want to call and find out if it good. I said, you read the prospectus yet? And so what?
Oh wow! Oh wow! Oh wow!
Because he never wanted. I don't know. I'm not talking about him when I said this. He said to me, he don't want to miss him like how Wigton did miss him. And I said, really? That's why you're buying? Not that. I mean,
not that it's a good company. Not that it's a a product you believe in. Not that you've read the prospectus and you at least see the numbers.
Exactly. But here. Yeah, but to tie it back to the point, here's how the whole different mindsets come in now, right? Because he put his money in that, right? And the stock after IPO, it fell a bit. But when we were on the phone, I said, here what? I mean, you already put in your money. It's not that can be done. But it doesn't matter because why are you investing it? And him say, no, long term, I feel them kids him putting it down there. I say, you're sure? I say, yeah. I say, are you sure? Him say, yeah. And then I always use this example with my friends. I said, so if it drop whatever after IPO, you're good. Yeah, because I don't know. Long term, I'm a children's future. I said, cool. Anyway, said stock falls within the first week that it lists. He pulls it near the lowest point out of fear within days, like 3 days, right? So I said, him show me him show me after him do it. I say, yo, I couldn't take that. It's crazy. Again, I'm my kids' future money. I can't risk it like this. I said, but you say you bought it for the long term. Him say, yeah, but he was in a situation where he wasn't really doing the thing that he said he was doing. Him think him in there for the long term until it did. Then suddenly he realized, no, I really wanted to flip it within the first week, right? If he said that to himself from before, if he was honest with himself from before and say, I'm looking to flip it, he would have been already on a different page because his mindset would be different and what he's looking at should be different, right? And so that's why I can't say what any single one investor type is, but I can say that the way that you find out which type you are is to be honest with yourself about what you want. Because the second you're in a space where that don't happen, you're going to know very quickly. If you just get a dividend check and you look at it and you're like, boy, it look rough. I thought I'd get more than this, right? Then you're actually not in a space. You're not in a space that you wanted to be in. Because if you're in a space that you wanted to be in, when you get that dividend check, no matter how small it is, if you were buying for those dividends and the continued effect of it, you'd be happy. You'd be great. Yeah, man, you'd be happy. You'd probably be buying more. Yeah, you would send a dividend check back to buy even more.
More dividends.
Yeah, that's what you'd be doing. And on the flip side, And this one is even more common. If you bought something without any clue either, or you said it's for the long term, but really you bought it because you want to make money, and the thing that you put it in made a lot of money, you will find yourself in a weird place of having made money and not knowing if you should sell. I'm gonna know if more want to sell because you never really know what you bought in the first place, right? So the key to finding all this out first is honesty with self. Be honest about what you want. Work out what you want. Be honest with yourself about it, and don't be ashamed of it either. There's no shame in saying that, yo, I want to flip my little 100 grand into a 200 grand.
And buy one thing, you know?
Yeah.
So,
Cologne buy.
so how do you master your emotions? How do you master? Because you said that once dude, and I want Danai to start this one because he's just sitting down there going the whole time Randy's talking. So like, how do you? Because you said Randy said that his friend once the stock dipped, that's when he sold. How do you watch your money go down and not like tear out your hair, bite your fingernails? Like, how do you mentally just go, yo, it's fine. It's okay to lose money. It's, you know, how do you say to people, don't freak out?
All right, so first of all, I would never tell anybody to master their emotions. I don't know anybody that has mastered them. I don't think, as much as I hear Mr. Buffett say whatever, you saw what happened recently with he owned some airplane stock, Corona hit, and he sold airplane stock. Very quickly. I don't know about watching it go down. It just didn't match his goal. He expected whatever to happen, it didn't happen, so he just shift. Where I recently spoke to some people about this specifically, about mastering emotion. I think people are applying to the wrong step in the game. So you should master emotion when you're looking at the company. You're deciding if you're going to invest in this company, right? So you look at the company and you say, I have no feelings about the company. I might like them product, I might whatever, but it's best to have no feelings about it. So as much as you buy there, it might be a bad company. You love the burgers. Suppose you're the only person that loves the burgers at the burger place they're going to buy. It just don't make sense, right? But they buy the burgers and don't invest there. So look at the company passionately. You have to look at it and say, boy, I don't care about this company as long as it does well, or as long as it can do what I need it to do. If it doesn't, then you move. If it does, then fine. At the stage where you're looking at the company and you own it and it's falling, I can't tell you that, boy, you should master emotions, because even me, when I have an expectation of something and something does happen within my timeline, I will be upset. I'll be bothered by it, right? But then at that point, you go through the feelings, the cause, you vex, whatever, things mash up, you have to deal with it. But at that point, you have to stop and say, boy, as much as this thing is happening, I have to either make a new plan or decide that the old one was good enough. So I buy way back when I bought Carib Cement, right? Still set at $55, right? Cable and wireless, great. He's saying that specifically because he knows that happened with me at Cable and wireless. Cable and wireless, I buy it at $1, right? And say I bought it for whatever reason, expecting it to go to $1.40. So I saw it do it before, so I expect, it must go to $1.40 again, right? Based on whatever analysis I did, whatever. It turns out I am wrong. It falls to 80 cents. I have to decide now, what's my next step? Either hold it through this and be upset, or buy more or sell. So I have to fully decide now what's a new plan given whatever information I have in front of me. So as much as you feel emotions, as much as you vex, you have to go deal with that. But you can't not feel away. If you're generally going to feel away about the stock falling, you can't not feel away and know that the stock has fallen. So apply emotions at a different step in the game than when things going bad or things going good. But things can go good and they sell the stock too early. So far that happened. So that's not, if you define a goal, that's how somebody just said, if you define a goal at the start, then you're less likely to be upset when certain things happen to you, because you can then go forward and say, boy, what should I do now? So that would be my take on that.
Yeah, it's a strong point, and I agree with it. And I'll complement it with adding to it with on the other side, to the winning side, because we think about these things as things that we need to manage when things are bad. You can't just plan for the bad. Yeah, the real success I find oftentimes is in planning for the good. Yeah, you want to see people who are truly broke and truly unhappy because they're broke. Check people who win the lotto 10 years later. So it's not a matter of planning for just when it's bad, because it's easy to do that. Survival, we know it for Jamaicans, we know survival every day. It's when things are good that the real plan have to come in. I joked earlier and I said that there's a point in the investment journey when you buy, especially how the market has been over the last couple of years. If you're just buying IPO because you hear about IPO, especially over more than a year ago, chances are whatever you close the eye and buy went up really well, right? Like everybody who bought Fontana at IPO is very happy right now. But how many of those people are wondering, should I sell? Especially because you've been seeing it fall for so long. You're wondering, should I sell? But it fall, and you see, that's when you know that you're tied up in emotions, Because if you bought Fontana at IPO, the thing that you feel bad about is what? How much is Fontana today? You know that, right?
Around 6, around there.
Yeah, around like $5.75, $5.47, $6 thereabout.
So $6, the exact number matters, and the reason why I'm saying that the exact number matters is because I want to say Fontana IPO'd at $1.88, right? And you're currently looking at it at $5.53. So you would be thinking and feeling bad and worried about 294% more money than you had, right? If you want to be technical, almost 200% on your money in 2 years, and you're wondering, you're feeling bad, you're feeling stressed about where you should sell, and it's only because you're really caught up in the emotions of it, and you remember that it was high at some point. A year ago it was high, and I was wanting the same thing. I never said, "Man, no, me should have sell." When it was at 8, man, no, me should have sell. When it's 7 or whatever, you beat yourself up all the time about that because you're looking at the wrong thing. So I tell you to plan for what it is that the good time would represent. That's where I try to start people from. And it sounds fancy when you say that this way, but we call it the goal. You just have to be dead clear about that, and be like I said, be ashamed of it. Don't think that your goal has to impress the person you're telling it to. You just have to impress you.
Exactly.
Right? Yeah.
You have to plan fully, because
So what's about the fear?
Fear of what?
Same
The
thing.
fear of, so for those of us who aren't numbers people, who don't have that understanding, we're not actuarial scientists, we're not, working. What about how if you don't understand the numbers, you don't understand the ratios, you don't understand the percentages, you don't understand the financial, the different statements. What are they supposed to? What are we supposed to do?
Oh boy. If generally, I don't think there's a lot of hard math going into this, to be honest. People look at it and they get scared.
No. Numbers people can't tell non-numbers people about hard math. No.
I'll leave that point to Randy, but if you don't know, the best thing you can do is try to learn a language, and you find somebody you can rely on. And I hate giving this point because I don't know most people that can tell you to rely on. So find somebody, a good advisor, whoever that happens to be, will be able to help you with this. If you don't think you're qualified to manage your investments, I think most people are qualified, leaving that out there. But if you don't think you're qualified to manage your investments, then you probably shouldn't be the one managing your investments.
Okay.
But again, I think most people are qualified. They're just not sure of certain steps to take going forward, because you can invest without numbers at all, actually.
Very successfully.
Very successfully.
Yeah, I wouldn't encourage it.
Yes.
Let's be very clear. Let's be very clear about that. It's not something that's encouraged.
Yes. But, go back and learn the language. But yeah.
But the sense and the understanding of business and common sense and money and what look good and what value is preceded the systems to count that. Somebody did it, and did it again and did it again, and somebody else saw them do it, or the person doing it thought, yo, I'm so good at this, I need a way to express
Codify
this.
somebody else to do it for me soon. So if you want employee, so you just make them, you teach them the thing. And to make the thing, you need to have it a certain way. We need certain rules around it. To you, it wasn't that thing.
Yeah. Or I just want to teach other people about it, and I need to find a way to take what's in my head and put it out there, right? Or other people see, because you forget all of the yapping around business, you know. At its core, business is the human race being better at things. 100%. It is business is literally human race being better at things, right? Amazon is a terrible capitalist company, blah blah blah. Amazon gets things to you in Jamaica via Jamaica Customs that you didn't know existed 10 years ago, and they get it to you in maybe a week. Exactly. And that's even lower if you use Mailpack. But literally that, as much as a company, like it's a company and it's rich because it does a thing that nobody has ever done at the scale in the way that it is doing before, and it's so good that we take our hard-earned money, we pay them for it. So companies are really good, and the human race has only gotten better by teaching other humans and allowing humans to learn from the things we've done. And so that's why the companies that are best at it have the most money, or the companies that we expect to be the best at it have the most money. Yeah. And the iPhone is an amazing device, which is why Apple is one of the most valuable companies in the world. Yeah. Oil in a barrel that can be used the same way in South Sudan that it can be used in Kingston is an innovation that is so amazing that the countries that have oil, let me leave your countries out of it, the companies, oil companies are some of the most powerful companies in the world. Yeah, it is literally a showing of human values. So you have to have a language to it. So I say all of that because I want to be stressed. That I know I feel I can already hear and see the comments about that nice thing being misinterpreted. The numbers are 100% necessary. But I can tell you, as somebody who loved math so much that I did English literature, that it's not as scary as you think. And I know that you're not going to believe me, because I know people tell me that when I never know a little bit more. And I didn't, yeah, but you don't know what it's like to see a math paper and your brain just freeze up, right? I know what that's like. But, you know, these glasses, I'm not that kind of nerd. Right? It is not as hard as you think, and the common sense you have, it's actually literally just the language for the common sense you have. That's what math is. Yeah, and I've learned that. So you already have the common sense to be able to invest. Nobody has to tell you that. Like, I grew up seeing my mother use Grace products. I grew up and I use Grace products. Grace is a company on the exchange. Now, if you want to invest along 25-year timelines, 10-year timelines, 5-year timelines, you don't need to know the exact number if you're using the product every single day, and your mother was using it and her mother was using it, right? Yeah, I have never seen a brand new vehicle being used as a route taxi, but I see route taxis pop up every day. So if a company is on the exchange that sells the kind of vehicle that people use as route taxis, I don't need to know all the numbers to know that that company must do well, because these goddamn taxis are everywhere. Right? So it's that sort of thing, you know, if you want to cut it down to...
Their ATL, please list on the market.
You find a lot of people investing that way. Like, a lot of people invest that way. They come, they see this company that they know for whatever reason. They never look at the numbers before. You know a lot of investors that they find about the numbers afterward. They find out that JC posts on whatever side, but they just know, they found out somewhere there's an IPO, and this company that they know does whatever is listing, and they want it at whatever price, whatever it's doing, because they know the company. People invest along those lines all the time.
You don't need a degree to know that is one cement manufacturer. They haven't figured out how to be like very few people deliberately live in a building not made of even some cement. Right? So 2 and 2 You can put them together very easily. Right? And if you want to know exactly, well, not know exactly, but have a good idea about what the actual cap gain on the stock price might be in the next 3 months, that you don't try to enter that kind of game without knowing the numbers or paying attention to the numbers. But if all you want to do is put on money for your kids, like NCD is still gonna be a big bank in 30 years. I suspect.
You suspect.
Well,
You suspect.
Yeah.
All right. So give me a situation, and we'll start with Randy. Give me a situation where you yourself, you were disappointed with an investment decision. And how did you handle that?
Every day. Every day. Every day. I didn't buy anything in Barita's last APO. Yeah, that last nice run that happened without me.
And this is his direct that he's been speaking about from ever since.
There's loads of people who never even know something named Barita until I spoke about it, and them. You see how much money? And I have to get the DMs every single day. Every day. I can't walk road because the people talk to me about, yo, listen, you don't know me, but Barita helped me pay for the, and they never helped me because I didn't know how. That's what I'm every day, every single day. Maybe that's what biases me towards planning for the good, because every day I don't believe in owning too many stocks, so I for no reason. So I look at the market. So there are almost 90 companies on the market. I'm not going to be in 90 companies, and there's things that I see every single day, and I don't touch the vast majority of them. So yeah, I tell myself these days, because just like Danai, I'm a human being, so it affects me the same way. Worse, I know what I'm capable of, so I can't even give myself an excuse. And it's not like you never know. No, man, it hurt. You have no idea. You have no idea how hurt I get over some things. Yeah, so it happens every day. Just feelings are feelings, and that's a completely different thing from an action or a fact, right? Feelings I don't know how they work. We don't know as humans how they work. So I struggle still, but I understand that I have to separate how I feel from what I do if I want to make money. So I feel great that this thing went up 400% or whatever, but I only got 1 out of the 4. So I get to you at least, or I see a play and you don't have paper system have a play completely and then don't touch it, and it happened exactly how you saw it happen. Every day you watch it and you don't do nothing. Kingston Wars I talk about all the time. I've never owned that stock because it has been in my book overvalued when it was in the $20 region or the $30, whatever it was, the 40. It was overvalued to me. It was in the 50s. It was overvalued to me in the 60s. It was overvalued to me in the 70s. And I have to watch it go all of these things and tell myself the same thing. I just have to feel it. But dealing the money like JPS, it don't matter if you're good, you're bad, you're ugly. If the bill is due on the 27th and you don't pay it, guess what's gonna happen on the 31st? Yeah. That's I know you feel bad, but snip. I am so happy I didn't say the other word for snip.
All right. So my story is my very first investment. It should be a cautionary tale to a lot of people. I've said this one a lot, I think. Randy just mentioned cable and wireless. I think he did it just because of me and cable and wireless. So
my personal love story.
When I first started investing, I messaged Randy on Twitter and said, yo, I want some help. I don't know anything about this investment thing, but you're the guy talking about it. And he said, all right, join this group, whatever. Just look what people are talking about and you can pick up what you should be doing or whatever. It's a group to help people, right? So I joined the group and I did the opposite of what Randy was preaching in the group. So I see Randy talking about cable and wires that he bought like 2 weeks before. He's talking about the gains he's made so far on cable and wireless. And I said, all right, so he's Randy guy, know everything. I'm talking about cable and wires. And I said, Nigel say, yeah, man, I do the same thing. And Dimitri say, yeah, man, I do the same thing. So I said, oh, cool, I do the same thing too. So I went on about cable and wires at like $1.50 or something like that.
It was very high, maybe 128 or something like that.
One something. Randy, next week, Randy is talking about the gains he's made on cable and wires. So I go and check my screen now and say how much money I've made so far. Cable and wires drop. I'm thinking, what's this guy talking about? He must make money if he buy already and gone up. I checked the group and I realized that, oh, Randy is talking about the buy he made 2 weeks ago. He was selling at the point he was talking about, which is the point I was buying. So cable and wires is falling and I was buying. I lost out. At that point, I put all the money to my name. On my savings I could find. It wasn't much, like $20,000. Put it on cable and wires, and I lost a good amount of that. It fell down to $80, and I sold it at around 90 something cents. It fell to 80 cents. I sold it at around 90 something cents. And my response to that was to learn, boy, you need to actually do the homework. Don't follow what anybody else is saying. Even if it's Randy said, you have to really get the am I investing because I want it or because Randy did do it already? So I took that lesson very deeply. So yeah, that was my regret story, buying cable and wires. But no, I don't regret it really. I regret doing it in that sense, but I very much appreciate the lesson I got from it.
Yeah, and you learned it early. You didn't learn it when you didn't learn it at the 20 million point, you know. Yes. You learned it early.
Other people learned that lesson very late. So imagine so Randy always says that one of the worst things you can do is not get something wrong. Is get it right for the wrong reasons. So you suppose I'd say Randy was talking about stocks. So Randy was talking about the stocks he's going into. I kept like 3 times I met money with him. Like Randy buys, so I buy, and I make money. Randy buys, so I buy, I make money. And there was the one time Randy chose the wrong thing, right? I put all my money in that one thing because 3 times don't Randy right. And then now I lose all my money because I listened to the one wrong thing. Then Randy said, see, yeah.
Somebody just said that. # Randy said.
It's a whole,
yeah. It's a whole joke. It's a whole joke.
Oh my God, I'm going on Twitter. # Randy said. I'm going to look up that hashtag now.
Joke, not movement.
It's a good movement though, you know?
Yeah. People who buy cologne with their money are wasting their money.
Everything Randy says is a movement, man. Everything.
No.
My cologne, gents.
Yeah, no, but then I write about that point about learning, and I should point out that remember, as much we also call it a journey, but you don't learn the lessons the same way every time, all right? And you don't, yeah, just because there's still things I come back to that's basic. Many times the things that stop you find the answer to it isn't usually something complex. It's usually because the simple answer isn't giving you the answer that you really want to hear.
Mm-hmm.
Right? And so give me something that sounds nicer so I can hold on to, because that looked too simple, that too obvious. And I don't like it. But when the obvious simple thing is right and it's going to make you money, you love it. But the second it's not, you don't do it. And I said that those are the conversations you find yourself having. That's the reality of actually investing. Yeah. The longer you want to get the money, like the longer the time between now and when you want to get that money, the easier it is.
Mm-hmm.
You can lock your eye, like I said, NCD is going to be around, Grace is going to be around, Separate is going to be around, or some version of them will be around, right? So it's easier in the longer term, and I find often to the people that are hitting themselves the hardest are the people who should be looking at the true longer term, but just being honest with yourself that that's what you want. Or if you don't want that, also be honest with yourself and say that's not what you want. Mm-hmm. It's okay to say, I want to make I hate the light bill. I want to make at least $5,000 every month to cover the light bill. Or I want to keep the AC on and it's gonna send the light bill up by $5,000. So I want this thing. Don't make nobody shame you, because nobody's there to help you when the light bill needs to be paid.
AC money.
Yeah, man. Make your AC money. Hashtag that.
Hashtag make your AC money.
Yeah, man. Whether it be the AC or the hotel, it's just you you need to tag your goals to your real life and allow that to be the guide for you completely. And everything gets simple after that. Trust me. Because yes, this is good, but it's no longer about whether or not it's good. Is it good for me? Yeah, and nobody can answer that for you. Some people can help you to answer it, but you realize that they have to know a lot about you. Right? So I can't accept that I must buy something that will pay off in 10 years when I told you I want to pay for my coronavirus vaccine in 3 months. Right? Don't give me the 10-year thing for 3 months. I know it's
the box.
Yeah, exactly. Yeah. And it's not to say that the person selling the box is doing anything wrong. It's up to you to know what you're buying. What do you think everything else? We got supermarket and there's
a 10-year box, but I need 3 month corona vaccine money. Hold the line, but you're still buying a 10-year box.
Yeah. And the only way to know that is to be able to identify the boxes. Because we know in everything else. The guy downtown is not going to tell you that the slippers are fake. They look just like popular slippers.
Correct. They look like popular slippers.
Yeah. I can't afford that suit. Also, they're not going to tell you that it might pop in 2 weeks. Right? Obviously, we know that you can't depend on the seller to tell you that. It's to us to look at the slippers and work it out ourselves. Or we have to know that, okay, you're telling me things that sound good and they are good, but they're good in this way. That's all. It's just, we just need to know more along the lines that we need in our lives.
I think Jeremy is going to hashtag popular slippers. So there was a course that I did. I won't state the name of the course. There was a course that I did. It was a financial course. And somebody said to me in the course that we should recommend the stock market to persons because it is a way to save. It is how people save. Do you think investing is saving, or is there a investing versus saving?
It's the best mechanism ever.
It's the best?
It's the best, yes. It's the best savings they can do. As Randy, I'm seeing Randy's version of this one, I don't save.
Yeah, and you shouldn't either.
I try to keep it as small as possible.
So all your money is in the market?
Definitely, as much as I can fit.
Okay.
You know, a savings account, they're hoping that the money is saving at 0% interest, right? They're hoping.
No.
But you know
0.64.
0.64%. Boy, hope it's not a strategy. In reality, they're getting 0.64%. But then they pay the fees, which bring it to below 0.
Backdated service charge.
So you're actually paying somebody to hold.
You have to go that far. You wouldn't even have to go that far. Inflation alone, nothing,
Exactly.
no account interest rate is above inflation right now. So
you can put it somewhere where it can actually make money and beat the inflation, and you're not getting beat the fees. Then you're good.
Yep.
Best savings ever.
Yeah.
Imagine you save $100 and end up with $200.
Well, somebody is asking a question right now that's related to this particular topic. She's like, what about the emergency funds?
All right, so remember I just said that my savings account is as small as possible. That's the emergency funds. And some portion of emergency is in the market, of course. But for the emergency where I can say, boy, I can't draw money from the market, but I need money. I might need money immediately. And I can't wait on T+2 or whatever to get the cash. Then that's what's in my savings account. So you're going to determine your emergency funds. You're going to say, boy, how much money do I need at whatever eventuality, whatever situation might come up, I might need this money for whatever. Then keep it somewhere close. You can get it under your mattress, in your bank account, whatever. But the other money that you find disposable, that if you have $1 million in the bank account and you only spend $20,000 a month, boy, put a good amount in some investment vehicle, right? and keep the money that you really get to draw upon in whatever emergency situation. And I said that with caveats like the margin facility existing. Because in truth, if I have money at a house that gives margin and I have some money in stocks, right? Then on the day I can say, boy, I need this emergency. I can call the house and call I'm saying house, but it's investment broker. I can call them and get a margin, borrow the money, and then sell the stock to pay it down. And the stock will clear, money will clear in T+2, but I have the money on hand from the margin loan. So you can do stuff like that if you're really inclined.
So if it is that I'm investing and I am a novice investor, because I mean you have the different, some people who consider themselves novices, but they really have a little bit more understanding, and some people who are, I know what I'm doing, and I can talk a good game, and man, this stock is really doing well, this company is really doing well. But then that's there are people.
You hear how dangerous that is? You're dangerous. What you just said is you're determining your money based on whether or not they talk a good game. And you're Jamaican, just like me. You know how good the game we all talk is. You can't. Your money can't. The talk a good game thing cannot be the basis. It has to be part of it, but it can't just be like you don't accept that in anything else. You accept that in nothing else.
How do I know if the person is if they actually know what they're talking about versus just talking a good game?
Guy looking. Hold on.
Return. Yeah. You can start there. You can say, boy, how much money? What's your percentage gain last year? What's the percentage gain so far this year?
Yeah.
Okay.
Simple questions. I put it in real life, right? You're at a bar and a guy looking you. Throw down the Bima key. Start asking, say, yo, whatever you want, drink, you can get it, blah, blah, blah. How do you know that he's not faking? You're very versed in that, right? We're all versed in figuring out if somebody is pretending or not. Just apply the same thing. And also, we're also versed in picking out is not forget pretending. Because again, it's not necessarily that they're pretending. Is what they're offering what I want. Because if that's what you want, it would look very attractive to you, right? And if it looked very attractive to you, then you would go for it. And what would you do if you're going for it? You test to see if it's real, right? Let's leave and we'll go in the bimmer. Suppose you go outside and it's not a bimmer. Right? It's exactly like that. It's exactly like that. If suppose you go outside and it is a bimmer though, and that's what you wanted, you're going to bimmer, right?
Yeah, but suppose the bimmer don't belong to him. Suppose him just a pose with him friend bimmer. Like, how would I even know that? How am I supposed to trust that?
What I've learned from Twitter is that what they do is you ask your friend in the friend group who is the one that's good at searching or researching a person.
Oh, your FBI friend? Yeah, everybody has an FBI friend.
Wow.
So apparently all women have FBI friends. That's not how it is in guy groups, but okay.
That's it. I don't know anybody like that.
Yeah, we carry that concept over to investing. That's called research. That's what.
Oh, is that what that is? Okay.
Yeah. So in other words,
you
do your own research. Your FBI friend, just FBI the prospectus. Just go through it and see if it's saying something that makes sense to you. The second you read a prospectus, you'll realize that it actually makes sense. It's written, it might be long, it might look boring, but the second you actually start reading it, you realize that no, it's written in a way that it's meant for me to understand it. It's just them use the big word, and then the next thing them do is them define what the word is.
Yeah.
It's just research, that's all. But if he's here research first, no, I'm not do that. Not for me. Me hate maths.
Should probably start having, just like when you have like book clubs, you should have like prospectus clubs. Like anytime an IPO comes out, a group of you get together, everybody gets a piece of it, and then everybody discusses.
I can push it to something like that.
Yeah, there's this guy that does this sort of thing.
Every now and then he does, like every prospectus actually, he does that thing there.
Yeah.
He does a read through for SLC and he talks about it. He
Yeah.
interprets it for people and tells them
Yeah.
about the company. You know, it's when name Ryan Roar or something like that. He's on Twitter.
Ryan Roy. Yes, this guy on Twitter. Yeah, I've seen it.
Randy Sayre or something like that.
Yeah.
I don't know why it's
Something
Randy.
like that.
His name is Ryan. I don't know.
I think there's something about the APO that's coming up that he's doing on that too.
Mm-hmm. Yeah, he does APOs too. So every project of JC put out, you'll see. Every micro.
Really?
Something like that, yeah.
You might find him there.
Yeah.
Yeah, but what happened to the people that think that, you know, so
Nobody's
There's-
going to believe that this is not an ad, you know. And it's not an ad. You know, nobody's going to believe it.
yeah, he's like, oh yeah, come find me. You know, I can help you. So, what do you guys think about like overconfidence? Persons who they think they know it all. They find that, you know, it's worked for them a couple of times, and you know they get so comfortable with each passing trade or each passing stock that they're now overconfident and they're out there just like, yeah.
Easy to acquire, to lose. If you're overconfident, you often lose, right? It's very easy in the first trade, right? I said it earlier about getting something right but for the wrong reasons. So if you're overconfident implies that you're confident but you're more than you should be, right? So if you get something right, then don't use that as boy, I must get it right the next time, because then you start slipping up and making mistakes along your process. So stick to your process, you know what you do it each time. So don't make that feeling of boy, this thing is good, I did this thing right, lead you to doing the wrong thing the next time because you think that because I did right last time, it's right this time again. Every company is different. Every investment vehicle is different. So you have to look at everything on the basis of themselves and then decide at that point. So it goes back to feeling. So if you feel about it in whatever moment you feel it's going to ruin you. So you have to not be overconfident. Yes, you can be confident about investments. It really helps because you know you find a lot of people they tell you about how they go bad because of they lack confidence and don't want to pull the trigger on this buy, and then 2 months later they find out that what 2 months later they find out that the thing gone because they couldn't pull the trigger. That's straight from the point that you guys know are tangents. But yeah, so overconfidence, it's a sure way to ruin investments. So avoid it as quickly as much as possible.
Fair enough. So
I mean, to add to that point, you said overconfidence. I say it always comes back to like how overconfidence often means that, I mean, how do you show the overconfidence? They're rushing in ahead of preparation, right? So they're going into something bigger than them, thinking that they are ready when they're not, right?
Mm-hmm.
And how do we know if that happened? Track record. Come right back down to the research again. That's the only way to know. So if you find yourself, and bring it to yourself, if you find yourself acting in an overconfident manner, the only way you'll know that you're being overconfident is your money is going to show it, right? The beauty of the market is that there is no back and forth. Mm-hmm. No matter how much I want to show you what the NAV says, QWI share price is not going to listen to me. It doesn't have ears. The two things are different. So I can tell you it's worth this, and I know it's worth this. Mm-hmm. And I can tell you it's probably going to meet it sometime, or it's going to get back up there eventually. But me saying that or typing it online is not going to send it there. Mm-hmm. Right? Yeah, that's not how it works. So if you find yourself running overconfident, and what that overconfidence shows itself in making losses, mm-hmm. you find that happening to you, you need to know. That's what Dan I mentioned. As I always said to him, it's almost better to have a loss, but to know why you made the loss. Mm-hmm. Yeah, knowing why is the most powerful thing that you can do. The knowing comes right back down to the research.
Yep.
Yeah. I say I wanted it for my kids in the future. I don't have any kids.
I I'm wondering because
yeah, it's just no, but it's something that people understand because and we all are parents.
That's a good point.
Yeah, it's.
Well, if my parents had just put down something.
Yeah. Well, they did, right? There's still a roof over your head. I don't know if you're at home with them, but you don't look like you grow on the streets. So I'm hoping that they did a good job. You get me? So it's something that everybody can understand. If you're putting on money for your kids, you really aren't planning to touch the money for the next 5-10 years. It's like savings, right? And if in year one it go up by 800%, you know within your heart that you have no idea why. And you want to know why. Because if it went down by 50%, you'd want to know why. Because I need to understand what's happening, and because you're scared when it go up by 600 or 800%. You want to know why? Because if I didn't know that was possible, if it happened and I didn't know what I was doing, imagine if I know what I was doing, right? And that is literally how you know whether or not you're being overconfident, if you know what's going to happen and why, and you can consistently do it. And when you get it wrong, this if anybody think I've given the secrets, these are the secrets. When you get it wrong, know why.
And back to the drawing board. You're going to have a big drawing board at anything.
Yeah, and when
these things went wrong.
Exactly. And when the situation happens again, you now know what should happen. And you get to test it. And if you get it wrong, you've got an opportunity to learn, okay, I'm wrong again. Where am I getting it wrong? And if you get it right, okay, I got it right. It worked. And that's how you do it. That's how you know if you're overconfident. When you find yourself doing that, you no longer think about overconfidence because there's no such thing. It's you know that you're overconfident because your dollar figure is going to show it immediately. You can't pretend it. You can pretend, but you feel it. And if you're confident and if go up, you also know when you're wrong because when I play, I'll tell you a funny thing about maybe a more advanced part of the investor stage for me is that you almost get to a point where when a play happens and the money is flying, it's not even exciting because I can.
It has reminded me to be excited.
Yeah, people who listen to the podcast would hear they wouldn't even know how much I edited it. Yeah, I chopped it so that it would sound a lot more exciting than it was. I didn't even sound that excited. Yes. It's not that it's not exciting. It's that
you expected it, so there's no surprise aspect to it. It's supposed to happen, so it's happening.
Think about Bolt's last Olympics. For you as a Jamaican versus somebody seeing him run for the first time. They're so excited, all right? No, you should be, right? That's a legend you're looking at. But I've been excited for a little while now, so I'm not excited. It's just like, it's going to be great. It's probably going to be the greatest thing you ever seen. Trust me, that's how you get there. But it's not like, it's just that I was excited before. So I get excited still. Get excited about things, but things I'm excited about now are things that you'll see at whatever timeline you see in the future. And that's why you understand why people really know how to invest and people really are investing. That's why they don't talk much, or they're very careful about what they say, and they'll say some things and some things they just won't speak to. Because there's one, when you asked me earlier about something that might have happened bad in the journey and how you deal with it, there's something I actually wanted to talk about, but it's still happening. And the recovery for it, like I don't want to talk about yet because I don't want to say anything about that stock yet. Not because of the feeling, because I don't want to draw any attention to that stock yet. You get me? I don't want people to it's just like, it's human. It's just like anybody else. It works for me. Like I get 300% if I can get my little money in there when it's at this price. All right, so I can enjoy more of the ride. Versus if I talk about it and people realize, wait, there really is a gem there. Oh my God. And then suddenly everybody starts to run to it and I still get the ride, but I won't be feeling as happy as I would have felt if I had gotten in fully before the roller coaster start, right? So you find yourself doing the research. When you do the research, I hate calling it research because it sounds so much harder than it is. Sometimes it's a headline. So
The
you didn't
FBI.
read that. It's just like Twitter. You didn't actually read the article. Headlines sound good. Sometimes it's right there. This company is buying that company. Really? And this company is listed. They're buying it for $10 a share.
That happens to me all the time. I see a headline and I go, what? Wait,
Right.
what?
And so it's not, you don't call research reading the news, right? And you say you're watching the news, I'm just watching the news. So it's not even news anymore. I'm just scrolling Twitter. The news is right there. Yeah, the tweet also. So you see it as it happened. Wow. That's just how it works. It's not research, it's just paying attention sometimes. And then, so imagine you're a regular person, you do your 9 to 5, you get paid on the 25th. If you know your money not going to reach on the 25th, you think you want to talk about it right now?
It's like, boy,
yeah, no.
This money.
I get that money because, I don't have enough to just go boom and throw it in yet. And I know that happens at every single level because Warren Buffett doesn't say certain things until a certain time. He don't mention it. And then after that point, you'll hear him talk about it openly and he'll explain it, right. But before then, and that's why when you talk about it, you'll hear him say like, we took a position in, and then he's explaining, he starts talking about why he likes something, they have a different mark, but at the core, all of the mark is the same thing. So value, and the only way to know value is the research. Literally how it works in everything in life. We know it if somebody trying to look us, we know it if somebody trying to sell us something, we know it if we're looking for a piece of property, we know it if we're looking for a taxi to jump into, we know it if we're figuring out if we like how this box lunch tastes or how the food place down the road go. It's not different, there's no special difference on the stock market. Common sense will make you much more money than anything else will on the stock market.
People often remove the stock market from reality. They forget that, boy, that company is that same company that sells me the corned beef that I buy every week. The same company at the building I walk past it every day. It's not that thing. It's something abstract and in the air. It's only on the internet. And if I buy that thing, it's doing this thing based on whatever it does. The market doesn't make sense. But in reality, it's an actual thing. It's quantifiable. And you have to do research. If you know more about it, then the better your chances of predicting what it's going to do.
Somebody gave an example in the group. I think it was last week. It was his description of the stock market. And I don't think I've heard anybody break it down the way I heard him break it down. He likened the stock market to, he says, if you understand how Coronation Market works, and I don't want to misquote him, so I'm just going to give a general. He says, if you understand.
That sounds very familiar. Very familiar. Keep going.
Says, okay, Ryan just came in. Hi, Ryan. But he says, if you understand, if you understand how the Coronation Market works, then you'll understand the stock market with the supply and demand, and the prices change and depending on what people need and want. Is this a Randy saying? Is this a Randy quote? Is that what he was doing? But he gave a very good description, and I really hope and wish somebody would repost it so that I could actually say what he said. And it gave such an excellent description as to how the stock market works. And I think it really did help enlighten a lot of persons who don't quite understand, because there are people who you go down to Coronation Market and do your research. You stop here and you don't like how this person look, and you don't like how the stall look, and you don't like how you don't like what the price is and so on. So you move a little bit further down and you look, and then you know what, that one look worse than this one. So you come back up to this one because this one's prices were better, or the products was better. So it really is the perfect description, and I think it helps to break it down for persons who feel overwhelmed and a little bit afraid of making that wrong decision, even if they do the research and they don't want to make that wrong decision, because that is fear cripples us all, and some of you are just more brave than the rest of us to jump in.
You will be very surprised
because you're not with me when I'm doing whatever and saying I need to know as much as possible. So I think a lot of people are braver than me and they don't know it.
Yes.
A lot of people that go into a stock with much less information than me,
Yeah.
and they're very confident about where the stock is going. Meanwhile, I'll be fairly confident of something happening, and I need that one more thing. So I'm just digging through a lot of research, a lot of newspapers, a lot of whatever, just to find out one more thing that is okay. This is enough for me to go in. So in reality, I'm not that brave. I just seem that way.
Yeah. Yeah.
So do you guys invest in over the different types of investments, or is it mainly just the Jamaican stock market? Because I realize that we have persons who invest in the US stock markets. We have persons who their main investment is real estate, and we have persons who, you know, they'll invest in commodities, and persons who will invest in cryptocurrency. I've always stated I don't do cryptocurrency personally. I don't tell persons not to get into it because I know the techie people understand it.
Yeah.
So
Do they?
I've heard that.
Funny enough, I find a lot of people that say the techie people understand it. They bring that techie person to me, and then the techie person just seems to not understand it anymore. But you'll find most of my investments in the public market, in the Jamaican stock market, JC. But I'm open to other investments. I just need to see where it makes sense for money to be outside the JC for that to happen. So yeah. I've made investments outside of it. But if you're lending somebody money that's an investment, you know. But yeah, if you buy a little corner shop, if you do something like that, stuff like that, that is investments. So, but most of my money will be found on the JSE. I don't often stray from it.
Yeah. I mean, do you know anything better
than the JSE?
Yeah, there's one. Not
quite. I mean,
everybody
has their own opinions. I mean, some persons are saying
that's not a matter of opinion.
So property.
It's not. That's a numbers thing.
It's funny because you just lost that one. You know, like if you're going to say, boy, somebody made 300% in some other market, we said property.
Real estate people they're 100% into their real estate, and they say even if it is that the Jamaica Stock Exchange is doing better as a whole, if it is that you don't have a complete understanding, that it does not allow you to make the right decisions, but people can go into real estate being complete novices and still do better than they would as a complete novice on the JSE. And that's the argument that I've heard. And I can't knock the people for their opinions.
No. You can't. Well, you can compare it to fact. You can compare it to fact, and I know it's not about liking. So here, let me say this, because for me, I'm not against real estate or any such thing. It is a class of investment, and it works for a lot of people, and it should. Remember what we say, you determine it. Is you determine what works best for you. So if somebody feels say, yo, I can tell you better, say somebody who 5 years ago put 20 million into a New Kingston apartment, you can't tell them to the wrong. No, they're selling it for 40 million, right? No, for me, I say, do you know anything better? Because if you're just talking empirically, in terms of, and you have to, again, what works best for you. So us as Jamaicans, we have a unique view on Jamaica and the Jamaica stock market, the Jamaica Stock Exchanges market. It's a reflection of a lot of Jamaican companies, right? Yeah, we innately know better about NCB than an analyst in New York using their Bloomberg terminal will. The analysts in New York don't know that every Friday at 4:30 on the 25th of the month, the ATM stopped working. They don't know that because nobody wrote about it, because it's so known to us that all of the systems for the main banks go down on that day. That nobody even needs to say it. In fact, in our articles, it's just spoken of as a side thing, you know. Under the pressure of a growing customer base, as we know, and somebody will retweet it and go, yes, every 25th. But we know innately. So the analysts in New York only knows what is in the blurb and what's put out officially. And they have a good thing. If you look at the numbers, it's a gem. But if you just looking at the idea, they don't have the inside knowledge that we have, and you don't need to be able to know the analyst numbers of the gem if you are living in Jamaica. Even if you live on the street, you probably live in half a tree near that big blue building near the clock. It's always been there. It's always gonna be there. It's just like the clock. You mean the NCB, but that's exactly how it works. So that guy living on the street might not know the exact numbers why it's a gem, but he knows say it's just like the clock. Both those things have to be there. And the clock has stayed the same size since it's been there. That thing kept getting bigger. There's clinging on the top of it keeps getting bigger. So you innately can do better as an amateur in the Jamaica stock market as long as you know what you actually are doing and you're honest with yourself. So if the guy living on the streets in Halfway Tree only have $500 and he's gonna buy whatever I can buy in the JC and walking downtown to go buy it by hand and don't know whatever it is that him doing, he's innately going to do better because he was honest about what he was doing. So if you tell himself he's gonna double tomorrow, maybe you should stop at the closest lotto shop and buy that instead. Right? More win. But the day him go, yo, I put so much money into lotto. I should part which company the lotto? Then suddenly learn about SVL because SVL win every time you lose. And you lose a lot more than you win. So maybe it makes sense to be an SVL shareholder. You see how you, as an amateur, you know better already. In the very same way, you know that the new Kingston apartment is probably gonna double. It's like there's a little art. I'll try and find a little screenshot I took years ago of Gleaner. It's a picture of the Gleaner classifieds showing a Norbrook apartment, like 3-bedroom, going for 20 million. And this is like 2016 or something like that. Something then, and you think then it was expensive then. It was expensive then, and no. But you think that 3-bedroom apartment in a gated community in Norbrook cost. The person who bought that cash knew what was going to happen, maybe in their heart, like, no, this place is always going to be good. You're going to get richer. This is a known area. It's safer, blah, blah, blah. So I know, say, that's going to happen, right? Don't separate that innate knowledge from the stock market. It's the same thing. Because if there's a company that has those apartments that are going to be selling them in that area, and that company is listed, they're going to make the money, which means if I'm a shareholder, I'll probably get a bigger dividend, or the share price will run up because people are excited about it and buying it when they hear about the thing that I innately know. Don't separate the two things. It's the same thing, which is why the people who do things like that are able to actually make money versus just sounding good. Yeah, you have to sound good. Your bank account will show it if you know what you're talking about. You won't be frightened by anything on the market. That's that I laugh after me. I didn't know that the market, we'd say it as a joke. We really didn't know that the market was down till about like the middle of last year. When the headline started saying how down the market was. If I'm not a fund, I don't buy the market.
All right, so every time somebody tells you how the market is doing, how down or up it is, ask them what do they do with that information.
Retweet.
What was that? Anytime somebody says how down the market is, ask them what do they do with that information. Okay.
You'll find a lot of stuttering. Well, maybe you like hearing that.
Well,
I saw Minnesota's question. Is that what you're going to ask?
No, I was saying that I think our viewers have quite a number of questions, so we're going to jump into the question and answer section before they start to riot, because I know we have a number of questions. Rand says, I only started noticing market values within the last year.
Yo, in the next 6 months, you guys are gonna learn what a unit trust is again.
Yep, you see it.
Yeah, you're going to see a lot of unit trust ads. They're gonna come back, coming back.
Never hear about it last year, but we hear about it this year.
Like the Lakers, they're coming back. Trust me. That's not a bad thing, by the way, right? So that's another thing we need to get out of our minds. It's going back. That's a very good analogy. That coronation market thing sounds very, very good. Yeah. In the same way, take coronation market out of where it is, the balance around that. If you live and work, if you work in the market every day, you cannot every day be at war. I mean, you can be at war with a person across the road from you, right? But it don't mean that their prices aren't good, or the oranges that she's selling not as good as orange. You buy the oranges from the same people, the same oranges, right? And so stop looking for good and bad and one off. There's nothing that's, I say it all the time, there's however many companies on the market, 80 odd, close to 90 now. There's so many security scams going. They're not, there's nothing I can truly say is so bad that I would not buy it. Yeah, the thing that is so bad that I would not buy it, I am a hypocrite because I bought it.
Yes.
Right?
And it's funny, so.
Yeah, the thing fundamentally that I should not buy, bought it and it works. I can't say that. And I said that to say, stop looking for good and bad. Yo, you're not going through the prospectus to see it say, hi guys, we're gonna steal your money, please buy it. They're never going to write that. Right? And when that's happening, that's like the guy going up to the girl at the bar. I am a terrible person. Let's go. And she's like, oh yeah, that sounds good. the terrible partners don't do that, right? It's just, you have to look beyond. You have to do the research. You have to find out that is how it works. That's literally how everything in life works. The market is the same thing. So do your research.
Interestingly, looking for good and bad. I don't look for, but I don't think you'll ever find me saying a company is a bad company. I never look for good and bad, I look for opportunity. So, as you said, something might be fundamental in quotes, meaning the numbers don't line up in a certain way that analysts like it. But something might be happening, or something you see something poised to happen with that company, where guess what? It works out. Key. When we were looking at Key before, a lot of complaints about Key. Boy, them can't be them claims expense. It just every single quarter something going bad. But then we know that if you listen to the podcast, I identified very early that boy, Key's a very good buyout target. Anybody that wants to be insurance, a lot of people happen to want to be in insurance, can buy out Key. And here we are today. Key has been bought out, and people have made a good amount of money off it.
Mm-hmm. Which I think I saw a question from Bianca Samuels, where she was asking about an example of something that we weren't excited about when it was happening because it was going to happen, and the thought process that removed the element of surprise. What Danai just said is a perfect example of that. Yeah, the excitement about Key. When we were excited about Key, you would look like a fool for being excited about Key.
Mm-hmm.
Yeah, when I was talking about Key, the very first time it sounded great. When I looked at him, like, well, based on what I'm seeing, it looks like. Well, I didn't say it sound crazy. It looked funny at the time. It was, wow, what a conundrum, right? That's what it looked like. And you see a conundrum, you immediately think, well, how would I solve it? What are the options to solving it?
Mm-hmm. And
based on the options to solving it, you start to build out what could happen. So by the time, like, people would hear about Key, by the first time I would have tweeted about Key, it would have been near boring for me. Or I was still so excited, or was really, I was probably still excited about it and I was tweeting, right? But then by the time it spiked the first time, because of news that people would have gotten. Yeah, and if you think about it, you think of when we got the news versus when it spiked, there's so much space in between the two. And you realize people are looking for not just the news, but then the news about the news. And then evidence of the news, and then them saying it the second time, and then everybody react, right? So in between the time where you see it and that happens, you're very excited. And then the first time when it moved, you're also excited, but then the second or the third or the fourth thing that and at this point, it's not that you're not excited, it's no, I don't want to say work, it's work. Yeah, but it's not, it's work, it's like training, it's like in the gym, it's not bad, it's if I'm expecting it to go to, this has to happen for it to be good enough in my view that it would go to X. No, I'm looking for that. When that happens, I don't feel, oh, it happened, I feel, okay, good. So it's like you're driving. I avoid that pothole. Okay, I avoid that pothole. And I'm excited, but you're kind of excited every time you avoid that pothole. But it's the same way. It's like you're driving. It's not that you're not excited. You could be excited. You listen to music along the way, you're having a good trip, you're going to country or something, but it's a process. It's not.
And this might go back to overconfidence too. If you think that something is obvious or something is bound to happen, then you're probably not the only person thinking that. Like, I don't think for 1 second when we were saying Key's a good buyout target that we were the only one thinking that. It's just, when is it going to happen? When we first got the news that they can't pass the test, they couldn't pass the capital test. And Randy came to me and he said, well, Key needs some money now, so what's going to happen?
They can't borrow it because that screws up the capital test anyway. So they have to raise it, which means the majority owners have to put some money in themselves. Or nobody does that. So you have the company is a company, so the company has to raise some money. And you can either right issue or APO, that's actually from the public. Or they could fix their business, right? But it's an immediate fix. It was an immediate fix that was needed, and the money had to be there. And then you look at it, you go, well, if they do a right issue, they get to do it. If the owners would either have to already have that much money personally, which is like company saving money anyway, which if you had it, you wouldn't have had the problem.
Right.
Yeah. So you're up. It's a conundrum. So to me, I'm looking on excited because. Wow.
Imagine Key before Grace saying, we're doing an APO, we need more money.
It's Key before Grace was in the picture. It was just Key when he was struggling. It was just, it's not, for all the stress that we get in Jamaica, our financial controls are pretty good. Yeah, it's a big deal if an insurance company can't meet its thing. It doesn't happen every day. Yeah, it happens a lot more in other markets than it happens there. Yeah, and we don't have that many, but I think the businesses themselves. I think what happened in the 90s was such a shocker for a lot of the companies that managed to make it through. That the companies themselves just run themselves in such a way that they're almost always ahead of what the tests are. If you check NCB's numbers, you'll see that like if the BOJ requires them to have like 250, they'll have 500. That sort of thing. And as an NCB, it's easy, but yeah, we're pretty good, right? So when a company misses, especially a public company, it's a big deal. And then you start thinking, how can they fix it? And so it's a road, and it's exciting when you see it, and you're watching it. It's like you're watching the news before it becomes the news. So you see it, and then when something happens, it's wow, they're doing it. I remember when they actually put out the news that they had a rights issue first. They're considering a rights issue. And I was like, wow. Learn that, Randy. Shut up and stop trying to talk about people pockets so you don't know, right? And then the rights issue was cancelled. I was like, wow. I thought I was wrong. I was right. Overconfident.
Still need the money, so what's going to happen?
Yeah, and you're watching this from just boring JC news.
Every now and then they give it the news.
Yeah, rights issue. Board meeting, rights issue is going to be considered. They only said that if they're saying, hey, in my view, that's often said to say, hey, let's test the temperature of how you guys feel about this.
Yeah.
Or,
let's get the reaction.
Yeah, or hey guys, be excited, right? They're not really considering it. They considered it before they said that. That's my personal view. I don't know, right? But the point is, it ends the same way and it's legal, so it's good. So we're having this, and then we're taking it and like, wow, because that's a big deal also to say you're going to consider it, and then say that I think they said that they were doing it, and then they said we're taking it back. That also doesn't happen every day in the market. So something like that, if you pay attention to it, which again is just seeing two headlines in your phone. I just, wow, that's a big deal. I don't see that headline every day. Click. And you're like, okay, so what's happening? Because remember, the situation is still the same. The company still exists and it's still going through trouble. It still has to pass that test. So what's going to happen? They still can only do this. The only way they can do it is if they find somebody richer than themselves and sell it to them.
And here we are now.
Yeah. So by the time March 2020 come around, it's not even March. By the time, I guess, October, November 2019, when it's like GK was being said. And then early in the year, GK Officially, we're talking about, and I think the final official date is sometime in March. Like I can't be as excited when I see it tweeted because we've been waiting. No, he always wins, bro. I mean, he does the thing. He's a legend. You should be thankful. And yeah, that's it's exciting. It's just no, you're just waiting on your money. You're watching your money. Yeah, you're just avoiding the potholes. I love I love OG, but
hashtag
I don't want to
avoiding
crash on the way there. Yeah, that's all. You're just paying attention to the road in front of you. You care about it, but you want to. If you take care of your car, same way, just take care of your pocket.
So Randy, what are 3 things you look for in a company you would invest in for your AC money?
I'd say that the direction, path, outcome. I'm stealing that one from the neuroscientists. Yeah, a company that's in the right direction. They said they're going in this direction. It matches my direction. They're on the path. And all of these things I'm knowing because I'm seeing it, right? NCB has said that they are intending, this is a good one. NCB has said that they're intending to make the majority of their income from card services over like the next 10 years. Like it's moving from like something minuscule, like 8 or 10 or 20%, something like that. I'm going from memory. To like something like over 60%. It's not like some grand insight. I read it in a Loop article, right? That's all. They said it to us. They said it. And if they say, okay, this thing is not that lucrative, but if we get everybody on, it can be really lucrative. And they're already this huge thing. I say, if NCV do it, everybody else can do it too. And then you think, well, if everybody have a card and it's like a big card services country, that's like America, right? So, well, what happens in America? Everybody love Amazon. We already love Amazon. Can you imagine if everybody have a card? What stands between Amazon and Jamaica?
Mail pack.
Well, are you sure? I don't know. Luckily, I can go on the JC's website and look on mail pack, or I can go on My Money JA. I can look on mail pack's numbers because them have to tell you. And you check, and they're like, "Oh no, we're making more money than we've made before." Wow. Here, have some of it back. I get it.
And you check the price.
Every time you see the price, it just does that. Here, have some more.
Okay. So this question's to Danai. Using debt to invest, positive and negative.
Of doing so. So debt, invest. Can I speak a little on it? I've done it quite a lot. Positives, we always start the positives, right? So you maximize. So the thing about, so you put $100, say you have $1,000 to invest, right? And you put in something that's going to, and the something gives you 100% return. So at the end of the day, you have $2,000, right? If you have debt, I borrow Randy money, he gives me another $1,000. I put Randy's money and my money into the thing. He gives me it doubles. I have $4,000 at the end of the day, and I give Randy back his $1,000. I know how much more than I could have had with my own money.
So you're not giving Randy no interest?
Oh, Randy, give him $100. It's a friend thing, so give him $100.
So I would charge him in the parts of the loan. There would be interest. I would be happy because I'm getting it, and that's why there are different types of investments. Yeah, because that's safer.
Yep.
Because he's putting the money in something that can it's not TV. Stocks don't drop 100% in one day. Definitely not in Jamaica. Exactly. It's not gonna happen. They're more likely to try and move up that way. But the same thing that stopped them from flying, stopped them from falling that much.
Yep.
Yeah, so it's not.
The beauty of debt is I make much more money than I could have with just my money alone. I take somebody else's money, do whatever with it, and give them back at the end of the day.
Yeah.
Downsides, it goes back to the first rule of investing: don't lose money. If I borrow Randy's money and I make however much, then I made more for myself, made Randy his money, Randy gets back his money, and Randy is good. If I borrow Randy's money and lose it, then I've now lost my own money and
Randy's money.
So to pay back Randy, I have to give Randy back. So say it drops from borrow Randy's money at $2,000. It falls 40%. So it's worth 60%, right? I have $600 for me left and $600 for Randy left. I have to give Randy back his $600 and find the next $400 plus his interest to give him. So I'll give him $500 from my own money. I'm now left from $1,000 with $100.
Yeah, and that's the downside, the risk.
That's the downside of investing with debt. Yeah. So you should be very careful of make sure you're reasonably certain. We already talked about overconfidence, so make sure that's not on the table. So
do as much research as you need to feel comfortable in case you get it wrong.
Your money and Randy money. So when you're paying back profits and not from the money you had before. So positives and negatives, make more money, or negatives, you can lose way more money. I'm not an actuary.
Yeah, it's not for the faint of heart, and it's not for the faint of heart, and it's not for the unprepared. It's not a hunch thing. Yeah, you don't borrow money around. If you're not willing to go in and get into the numbers, and that it's not hard. But if you're not willing to do it, then you shouldn't be doing that unless you're prepared to lose significantly. Yeah.
Okay, put up back that question again so I can read it. Danai says he's not an actuary. He studied actuarial sciences, but he's not an actuary. So this question is, as an actuary and an advocate for common sense, how do you strike a balance between common sense and analysis paralysis when you're looking at a company to invest in?
Mm-hmm. All right, so not an actuary, and I'm sure Randy can say this as well. So Lisa.
I'm also not an actuary.
None of us are actuaries, and we're all advocates for common sense. But I strike a balance in common sense analysis paralysis. Analysis paralysis is what exactly?
I think it's when you
have too much information to the point where you've frozen. You just have so much information.
And I don't believe in too much information. It's more, you should always know what you're looking for in a company. So what would qualify this company to be a buy for you? What would this company have to be able to do for you to say, I want to put my money in there? So you're looking at the available information, you get all this bag of information and you're going through it. Then you have to get up and say yourself, given all this, is what is presented in front of me enough for me to buy that company? Then you go forward with that. So as I kept saying throughout this whole thing, make sure you have a process so you know exactly what company is required to be for you to buy into it.
Mm-hmm.
Okay. I think we're gonna start wrapping up soon. So
this was going fine for me actually. I'm used to long talking, as you guys know.
Yeah, earnings season we tend to go for a pretty long time. Well, we cut it down for the last few times we've actually done natural, but it wasn't bad. If you have more, then I find going with more, we can go with more. What's another question?
If Lisa is fine going for more too, actually.
That is so true, Lisa. I take it for granted. I'm so sorry. My apologies. My sincere apologies.
I'm fine. I am fine.
Already,
I am fine. Don't worry about me.
Answer that one. So buy any stock you wish to buy.
Okay, why are there really no compound interest bearing account products in Jamaica?
There are. Every savings account is pretty much.
Every savings account compounds because if you make any money that's in that account, interest is on it. So then if somehow you end up with more money than you started with at the end of the year, your savings account, then you will get more interest on the extra money they give you.
I guess they want something with higher interest, maybe?
I think that's what it is. The reality is that while there is, if you put your money in a savings account, there is interest. Mm-hmm. The reality is if you put your savings money in an account for a year, it is unlikely you're going to get back more money than you put in because fees also come out of it.
Fees are more than interest.
Yeah, and but there is interest on that account. I think as at September 2020, I'm sorry if I'm getting this wrong, it's from BOJ's website. The average domestic currency overall weighted deposit interest rate in 1 year, you get 0.47% on a savings account. So,
but if I think you're asking the wrong persons if you really want a why, if you can't find interest bearing account, but speak to the banks, speak to investment houses, and see what they can afford, and maybe there's something that works out sensibly for you.
yeah, they said that the overall average weighted rate is, AW rate is the 1.03% backdated service charge. That's all I'll say.
Facts.
Yeah.
Okay, Bianca is saying, other than immediate and specific need for money, how do you set goals that help you decide when to sell, thereby managing your emotions?
I think it started with that. I said the money isn't the decider of what you want. What do you want to do with this money?
Yeah, let the emotions drive you.
You start going from there. You decide how much money you're putting in and how much you need to get out to meet whatever goal you have. So you want to buy a car cash, and the car you love is $2.1 million. Then you look at yourself and say, boy, I can put this amount of money in an account every month. And if I do that every month, how much money will I have? And then you look at the difference between the 2.1 million. Say you can only put 1 million at the end of the year. You have $1 million in that account. You're just putting money in that account. So you need 2.1 million. So you're going to decide that, boy, any investment I go in needs to take 1 million to 2.1 million for that investment to make sense to meet my goals. And that's where you have it. And you decide which investment can bring you there based on your research. And it'll be good.
I think she's saying in terms of managing her emotions, though.
Or when you reach a goal.
Yeah.
Not
she
saying
wants to set a goal
and say you have new goals and you work with that new goal. But whenever you reach a goal, evaluate, should I leave this investment or should I stick around for whatever real goal? So to make sure the real managing emotion at that point is the goal I'm now going for real. You can't look at it and say, boy, I put in 1 million, I made 1.1 million, and I must make 2 from whatever reason. You have to get up and say, boy, is the goal realistic? And you go for it after that. So maybe at that point, if you can really say the next 1 million, then go for it. If you get up and say, boy, I really can't see it, and it's not based on this feeling I have around making that money that does me, then probably best to sell and go buy a car.
What are the thoughts on a money market fund?
That's not for me.
I don't know.
Really?
Money market funds, unless these are the different understanding of it. Money market funds, they buy money market products and put in pool the funds together and then give you a return on that. They charge fees and probably a spread on the fund. Money market products are basically any instrument that you buy below for a year or less. So like a bond that give you 3% for that year.
Or 3% for 3 months, or 3% for 6 weeks, or 3% for
3% for 6 weeks. Weighted against
3%. It's a yearly 3%.
3%.
So yeah,
3% per annum.
Per annum for 6 months. So yeah.
It makes a difference.
You can see why that's not for me.
Yeah, but suppose I'm giving you the 3% for the 3 months.
So all right, that's for 0.75% for when you hold it.
No, suppose you get the full 3% for the 3 months.
But that's still not for me. I make 3% of 1
Can the credit card be the emergency fund money?
Sure. If
that works for you.
It works for you. If you get up and say, boy, this credit card can clear the limit on your credit card can clear any emergency that you can reasonably see for yourself, then go for it. As with every credit card, make sure you can manage it and you're good to go.
Oh, I have a lot of questions, man. How do you properly evaluate market sentiment? because your checklist can say yes, but the market can say no.
Oh, this is Justin.
That's Justin. Big up Justin. Justin, if the market is telling you no, then obviously your checklist is wrong.
Definitely. So make sure
Yeah.
you're really like aligned with your goals and what you're going for.
Yeah, man. That's the whole. You got it wrong. The lesson is in why did you get it wrong? Yeah, know exactly why, and you'll be able to test. You'll be able to test it the next time. What you're realizing is maybe a lot of what you're repeating is not wrong. It's just not moving the market because that's not what the market moves based on, right? Yeah, it's not. Isn't yeah? Everybody like
What you said earlier, Randy, is
Mhm.
actually really funny. So when you say persons need to be honest with themselves, it's it's a far more accurate statement than I think a lot of people even realize, because even if people are trying to be honest with themselves, because you have people who come in and they're like, oh yeah, man, I'm a risky, I'm a risky investor. I'm willing to take chances. But they really don't know because they've never been tested. And for a lot of people, and I think this is what happens with the situation where people have their checklist and they have their okay, this is my entry point, this is my exit point, and so on, and they don't necessarily realize that if it doesn't happen, or if they exit at a certain point, or they don't exit, or should they exit, and they're not ready to really accept that maybe I am not comfortable with doing something, maybe I am not ready for this, maybe I am not ready for that. And I think there are people who genuinely don't know that they're not being honest with themselves. They're not able to recognize that yet. I mean, my first time realizing the type of investor I was, when I just started, I was surprised. I was playing a board game, and the board game basically teaches you what kind of investor you are. And I didn't. Sorry?
What's the board game? What's the name?
It's Cash Flow, Robert Kiyosaki's board game called Cash Flow. So someone bought it for me for a Christmas present because I had just started investing, and I decided that it's as long as Monopoly, it's just as as detailed, and it
I know
is.
about it.
I've never seen it before. I know about it from the book.
Yeah,
Well,
no,
yeah. Let me know when you're ready. I have it, and I don't have anybody to play with. My friends don't want to play with me. But
is there like an online version?
There is an online version as well. Yes, there's actually I think there's a real online version where you actually play the game for real money. If memory serves me correct.
It's called Day Trader.
Well, so it's basically like Monopoly. You're buying property and it's saying, okay, well, you have this opportunity or you have that opportunity. This is not an ad for this game, people. At
this point, you can't.
But it teaches you what type of investor you are, because you're trying to decide, should I spend this money, but I don't have enough money. I'm going to spend the little savings that I have. Like, you really realize that the same questions you would ask yourself. And that is when I started to realize, because women overall tend to not be very risky, and they tend to not want to take the chances. And I realized at that time that I was one of those women that I was trying to, protect myself more so than make calculated decisions. So yeah, his question here makes me think of that aspect of people needing to really self-evaluate what it is that they are doing. Okay, so I have a question for Danai. Besides Randy and then I say, hashtag Randy and then I say, name a few other wrong reasons to invest in a company.
I think the umbrella one was when the company doesn't fit your goal, because almost everything can fall under that. But besides asking somebody and nothing alone, as we already went through the emotions in the process. So you look at you buy out the party from this one party shop, and the party shop is listed, and every day you're going to place empty. You look at the numbers are bad, but because you love the patties from that place specifically, you're going to buy those patties. If you're okay losing money, then sure, that's a good reason to buy the company. But if you see where if reasonably, without removing emotions, you reasonably say, boy, it's not a good look, but because I still like the patties, you factor that in the analysis, then that'll be a wrong reason to think this. So liking a company is not a good reason to buy a company.
In the short term, especially.
Yes.
In the short term.
I hate doing this, but there's so much caveats around that because I've said before where, boy, if you really like
you know what? The TikTok is just gonna have that part. The TikTok is just gonna have that clip of him saying, liking a company is not a reason to buy a company.
And then
here's this guy,
boy, like
because everybody buying it is not a reason to buy a company.
We already said that, as Randy and Dana said. Or a bad reason to buy a company is looking at the graph and saying, boy, the graph is pointing up, so it must go up for the rest of the time. I buy it there. So it's at $1, at least at 1, in 3 months at 2, I'm going to buy it because it's been going up since. That's not a good reason to buy a company.
Yeah. And the flip of that is that oftentimes they won't buy it at 3 because it's coming from 1.
Mm-hmm. So, it's not about where it's coming from, it's about where it's going.
Right? That's like you walk the Spanish Town on a taxi.
Mm-hmm.
And like the taxi, I'm at the Haney Park, so them loading half a tree, so it don't make sense.
Going that way.
It's not about where it's coming from. You want to know if it's going where you're going. That's the point. And investing on anything other than that is bad. Also, don't invest on if somebody sound good or don't sound good again. All right, you can't do that. It's not always sound. List the whole sound and put it in its rightful place. You don't accept that anywhere else in your life. So don't accept it with your money.
Right?
Yeah, you do the research. Check to see if what's being said is true. See if it makes sense.
Unit trusts.
I think they're a wonderful thing.
They're wonderful, but as always, they don't really fit everybody. And as we said earlier with the box, they package the products, they package the stocks in. There's a fund, they put these stocks, whatever weighting, inside the product and say you use that product. You have to decide if whatever they're holding, whatever they're investing around, whatever their basis for whatever they buy is good enough for you. Does it fit your investment goals? If it doesn't fit your goals, then you probably shouldn't be buying the unit trust. If it does fit your goals, then go ahead. The issue with unit trust is that they show you the front of the box, the label. They don't turn around and show you the things. They don't often turn around and show you the contents. You can read some of the contents sometimes. They say the top 10 stocks or the top 10 holdings in the company. But them don't show you read the label and you see that chemical word, they just don't know what it is. Some food coloring in some preservative, they just don't know what it is. Those are the things you're not going to see on a unit trust. Generally, they'll tell you that, we buy stocks, but do you know why they buy whatever stock they buy? What is their analysis? What is their deciding factor on why I will buy that stock? You don't know, but somehow the label that they show you at the front is good enough for you, but that's my disconnect with the unit trust thing. You don't know why they're buying, you will be buying for different reasons likely, but somehow that's good enough for you. So that's why it's not for me. It might be good enough for you. So check with whoever is selling that unit trust and see if you can determine whatever they put into it, if it's good enough for you. If that works out, then buy the unit trust. Sure. They're a good vehicle as long as you want the person aligned.
Yeah, I mean, I personally like them. I think that they are just know what they are. I think what happens is that a lot of people don't know what a unit trust is. It just sounds what it is literally
just a fund.
A fund. It's a grouping of stocks that a set of experts pick. And so if you want to know if it's good, look at the track record. And they show the track record. And unit trusts actually are very good, especially if you're truly long term.
Mm-hmm.
Look at unit trust track record over like the last 5 years. A lot of them are in the double digits. A lot of them are in the 20 odd, 30 odd, 40 odd, 20, 30 region, I believe. So especially say somebody is putting out some money if they want to, like my personal thing is like if you're looking at putting on money for your child and you put it in a savings account, it's much better in my opinion that you put it in a unit trust. Mm-hmm. Yeah. Instead of savings account, put that in a unit trust.
Yeah.
If you know that you're absolutely not going to pay attention to the stock market, you're not going to look at it at all, but you want to you still love your child, put in a unit trust. That is like the 10, 20-year performance of unit trust is beyond measure. Yeah. It's a power of a lot of people coming together under one umbrella, and then the broker manages that umbrella. So you can buy 200-300 million NCB shares, right? But
and get on the board and all these things. What they do.
Yeah, but if 2,000 of you put your money together, then the broker can put that 2,000 of your money together and buy it and have a board and make decisions in the best interest of the unit trust, which is your money, right? And so because of that, when NCB give you this much growth over the last 20 years and the unit trust is almost 40% NCB, then the unit trust grows and you get that growth that you didn't even have to know the details about. Yeah, that's how it works. So if you're absolutely not going to pay attention at all, it's a great option. It's better in my view than a savings account.
I said it earlier about if you're not going to look at your stocks, if you feel like you're not the right person to manage your money, then you probably shouldn't manage your money. If you feel that way and you don't have any intention to try to be that person, then I unit trust is there.
Yeah.
And there are other things in the way, but they're more than just the unit trust.
Yeah. And you can also, sorry, Dan, I think I cut you after some. You were saying something?
No, I was done. I cut you up actually.
Oh yeah, so I was saying you can also, just to understand what the next step is, just understand what the next step in terms of like, if you say I definitely can't pay attention to that, just what pay attention to that would actually be is like thinking, well, if the broker manages a unit trust and they take a nice fee from it and they take the fees a percentage, and if the unit trust go down, they take the percentage, and if you go up, they take the percentage, and if you cash in, they take a percentage, when you cash out, they take a percentage, which is good because that percentage allows them to do the management job and pay the people that are doing the actual thing. That's great. All you have to think then is, well, no matter what happens, they must make money. Maybe I'll buy their shares. That's literally just one step. It's just like, oh, these people are making money off me. All right, let me buy them shares so that I can make back some of the money. It's literally that simple. That's the next step. And however further you want to go down the road is up to you. But yeah,
best club. So that's what I always say, right, Lisa?
Yeah, that's what Jermaine says.
Yeah, that's great step one. A lot of people I know, when I do my girl courses, a lot of people talk about, they refer to the unit trust and go, oh, I'm going to cash out my unit trust then and put some money on this. I get that a whole heap. I'm going to cash out half of the unit trust money and buy NCV shares. And I say, well, make sure you make your decisions based on your data, and of course talk to your advisor, blah, blah, blah. But I mean, you probably got the advisors probably at the same NCB. They're going to want you to buy their shares. Everybody wins from the circle.
Indeed.
Yeah, you, me, them, Uncle Michael, Leachin, come right back around. Everybody is the same circle. When he gets a dividend, you get that dividend check too. His might be heavier, but yours is yours too. Why not? Yeah, same check. Yeah, and he can't pay himself more. Yeah, if he got 2%, if you can get 2%, you get 2%. Yeah, so you can. It's literally how you get to eat from the same table that everybody else is eating from. The money man them. Just buy some shares and you're one of us. You hear, Lisa?
This guy at the top at the company that you can buy.
Yeah.
You can sit at the table with him.
Yeah. And I mean, even if you don't like it, they're still gonna take the fee. And they're still gonna pay the dividends. So I might as well get back my fee.
Fuck.
Yeah, if it's that alone. Remember that when JPS finally comes to market. The love them or hate them, that light will come in. So I must take back my piece. Must, no matter what, as long as there's light, I must take back my piece. And every time you say, yo, them teeth, I have to say, teeth.
Yo, imagine a JPS dividend paying you that will.
I know, right? Oh my God, let me just use my
Must.
JPS dividend
Must
payment like this.
It must happen.
Listen, that's only 20% of it, man. So it's
It can
going to
already
be.
happen. It can already happen. A lot of people trying to make a toll.
Preference shares, yeah.
Yeah, the preference trying to make a dividend can pay the toll support more.
With them too, yep.
So it's happening. No, if you live in Portmore, if you live in Portmore,
You should have GJS shares.
Those coach, the heavy Scotia dividend the other day. If you're online cussing boy backdated service charge, then guess what?
I don't like us.
You know, like us.
But tell them you turn up. Cost myself too.
Yeah.
The two of you inspired me to go and look at my unit trust, by the way.
Which is right.
After our last conversation. Yeah, because I had a unit trust started for me, so I didn't know how much money was in it because I no longer paid any attention to it. I just kind of left it as is. I didn't pay any attention to it. It was opened in 2011 on my behalf by a company.
It might be great.
And yeah, I was putting in I was putting in money, the company was putting in money. And when I left in 2013, I just forgot about it. And after our initial conversation, you guys are like, did you make any money? And I was just like,
That's all rich still forget the money.
Yeah. Wow. So when you went and checked it, you were very happy.
I was happy. I was actually happy. I was surprised, but I was actually happy.
From when? You had it from when?
2011.
2011.
Yeah.
2011, and you checked it in 2020.
Yes.
Oh, you are NCB rich. Yeah.
I don't need to go that far.
No, that's exactly what it is. That's
back to the question. Okay, so what if your goal is retirement, but you want to use the spikes in a price to compound sell, then purchase when it goes back down? How do you set those goals, or how do you decide when to sell them?
So that's a great goal. That's a great process. We do it all the time. We speak about it. We do it.
is the Nintendo business again?
I know for a fact that Randy will have. We've spoken about it on the podcast. I have a long-term goal for a stock. Long-term. So I'm going to have a stock for 6 months. At the 3-month mark, they post results, and the market oversells it, overbuys it. So the price gone way past where you think it's going to be worth in 2 weeks' time. Where you know in 6 months' time, you're going to want to hold the stock. So you sell it. It falls back to where you think it should, where you think it's a buy again, and you buy it, and it goes, and in 6 months' time, you sell it again. So you compound sell, she calls it. So yeah, how you decide that? Again, I said earlier that I feel like I give non-answers because it's always almost goes back to the same thing. There's no real difference in the process. If you get up and say, boy, I just explained it there just now. So at 3 months, halfway through the time where you said, boy, I want to hold the company for this long period of time, and halfway through that time you said, this company is worth more than I think it's going to be worth tomorrow. So you already see that it's going to fall 20% from today's price. Then you already win it. Just sell.
Put the question back up, please. You realize she actually
exactly.
If this is your question,
they
already know what you're doing. You want somebody to say that it's the right thing. I cannot lie to you. No one knows. The market is going to inform you if you're right or wrong.
Mm-hmm.
You want to compound sell it. In other words, you want to sell it, but you don't want to cause the price to go down because you feel you have too much and you can dip the price maybe. Or you just want to get it out. You said compound sell because it sounds fancy, but you just mean sell. You want to sell because you think it's going to fall, and you want to buy a lot more because you're thinking I want to have it in the long term. You already said what you want to do. I can't tell you if the road is safe. I haven't gone down the road there either. We're gonna go down. You want? We can go together. But I don't know. That's the truth. Anybody tell you they know, they're lying. But what you can do is you can guess. You can look for the signs. Yeah, I don't know how many potholes are between Kingston and Portland. I have an idea. Last time I can figure, but I can tell you, it's always a pothole surprise. It's like Jamaica's greatest product, the pothole surprise. You just wow. It's a new one. Or that's a new one. That's a new pothole. But you see, ahead of time, you never hit it. That's just how it goes. So you think you see a pothole, but you want somebody to tell you that you should swerve. Is your front end. That is your front end. Does it matter to you to go through the pothole? If you think you really see a pothole, do you not swerve? So if you're looking to sell and you really believe there's a pothole, mean you want to buy it back when you don't put it on in the pothole, then because you get a lot more for the same dollar. Cool, I like that. That's a smart play. That's an intelligent play. And you need some bravery to do it. Well, that's the bravery. You just have to go believe it, and you will. That's why when you then hear that the stock price has gone down 40%, you feel bad because somebody in the corner going, "My God, you here?" And you go, "Yeah."
Randy likes cars, and then I likes food.
I also like food. I've eaten my whole life.
You hear me talk about Porsches all the time.
Yeah, he likes cars a lot, and I've eaten my entire life. I feel like, honestly.
Okay, next question. Is there a way to buy the market index funds, like how the S&P
500.
500
So the closest thing you have right now, either going to buy all the companies or you buy a unit trust.
Somebody said to me that I just buy the JSC stock.
That's false equivalence, to be honest. JSC is a company that runs whatever. It doesn't hold all the stocks together. So
yeah, but it does benefit from.
It does benefit.
Market
benefit from more things on the market, more movement on the market. It benefits. But if you want to buy the whole market, the closest I can do right now is either you go buy all of them or you go to a unit trust.
There's also MJE. Which is so that's not the whole market.
Not the whole market, but it's a large exposure to a lot of the market. And sometimes I would say it's a better part. I don't want
because there's active, so there's active checking there. But then if you really just want to blindly buy, like if you want to buy all the finance companies, you can buy Sagicor Select F, which is it is a listed equity fund.
There's a fund that follows the financial companies on the market, or Select M, it follows the manufacturing distribution companies on the market.
Yeah, so it's an option if somebody wants to. It's actually better sometimes because all it does is hold shares in all those companies in the same proportion. So when these companies go down, it go down. When they go up, it should go up, right? And they call it the NAV. And all it do is it's those companies. They're not trying to make money.
Yeah, just whatever those companies do, we'll try to do it.
Minus a little piece.
Yeah.
Because they take their fee. So maybe I should own the company that's taking the fee. You see how it work? Yeah, and nobody knows because you could be wrong. You could that's why you don't store around there. Then I say
you go check your own research
and talk to your licensed investment advisor.
Indeed.
Randy is not an investment advisor.
And neither is
yeah. Neither of us are.
Neither of us are investment advisor. Hey, but you guys need to tell people how they can get in contact with you.
Twitter. I don't think people are wanting or lacking a means to contact Randy.
Yeah, now on Twitter, RT Euro, every mickle actually. I said I am RT Euro and there's every mickle. And we also have earnings season. And this it's pretty much theirs.
Yes. And you can find me on Twitter at H.I. So for once, I don't have to spell my name because it's right there in front of you.
Yeah.
Okay, and Learn, Grow, Invest Club has put it up. So if anybody wants to reach out to any of them, have any questions, also please like, share, and subscribe to our channel.
Yeah.
Yeah, do that.
Yeah, I think I know anybody on would have hit subscribe already.
Indeed.
Because you guys do this all the time.
We do. We're up to two guests, 2 meetings per month now. And we have different persons coming on with different topics. So it's been very, very exciting to have you guys on. I know that I'm very grateful for some of these questions. A lot of persons were asking some, I guess, trying to help themselves with questions that they ask you, trying to make to feel
People should. Like you can't fault people for wanting to help themselves. Who doesn't want to help themselves?
But you're answering some of their questions make them feel more confident in their decisions because they don't always feel so confident in, maybe this isn't the right decision, but if Randy and Denai say so.
It's a good thing we didn't say anything about decisions like mine.
Yeah.
Just...
Yeah, and also that the thing that is being said is the thing that's said, that you have to do research and you have to talk to your advisor.
Mm-hmm.
Yeah, that's what Randy and Danai actually say. That's what we're saying. Actually, we talk about things, and of course, we talk about things that we do ourselves, or sometimes what we have done, or what we see ahead, or what we're planning to do, or what we think is happening out there. We do that on the podcast a lot, earning season podcast, but it's what we're actually saying.
Yeah.
And then check to see if it's true. Don't listen to it just because we said so, which is why we also say that. Like, go and check. We could be wrong. We're wrong sometimes. We're wrong all the time.
If you're relying on me to tell you what to do, then remember, I'm not going to be here for most of the time. So when you're in front of your screen, then I over your shoulder saying, "Yeah, man, do that." It's your money.
Danai's story was about him literally most of the times. Also remember, think if you're not talking to us every day.
Mm-hmm.
We're not there when you decided that, well, Randy and Danai said so are going to do this. Mm-hmm. And so when I'm going to come tell you, say, oh, jump out because we're trying to compound sell something or whatever, right? So we didn't know because you're listening. And then the next time you hear us talk about a company, we're saying, oh my God, it's down 50% and we sound happy.
And we sold them.
Happy. But we're not advisors. We're not trying to give you advice. So we weren't there the advisor should come to you and say, hey, you know what I think I was happy about? I'm not happy about it anymore. That's why you have an advisor. That's their role. That's part of what they do. That's why they have that duty. That is why I make it clear that that's what I'm not. Because I don't even know that you're deciding to do something, but I'm clearly telling you, don't make this the basis. Go and do the research and make that your basis.
Did you read that? Huh?
No, I just go through it every day.
Or this came on the
Talk about that question, please. I can't answer that. I can't answer her.
I don't know what the other question was, but I feel happy that I don't. I feel like I'm not a person. I don't have that expression.
I can't read that one.
Return of earnings season. I don't know. It comes out on Wednesdays though.
So every Wednesday. We'll give a heads up when. But
yeah.
Advisors. I generally don't have much advisors to recommend. There's a guy I used to recommend, Jeremy Beam, but he's no longer an advisor. He moved to a different side of the business. So I generally can't recommend Ryan because Ryan a rich man advisor. So
the heavy money advisors. I don't know.
And my advisors, I don't speak to them in certain capacities. I just put on trades through them if needed, or funding on JTrader. Beyond that, I don't use advisors. So I'm sorry. I can't help you there, but maybe Lisa knows somebody.
Lisa, you should know somebody, right?
I imagine
she knows people, but I advocate becoming your own advisor.
Yeah.
Right? meaning take everything that you can get. So you use your advisor in the way you should use your advisor, but also verify. Trust but verify.
Mm-hmm.
Yeah.
Be clear in your expectation of an advisor. Understand what comes with that relationship.
There's same investing.
Mm-hmm.
You have to be sure of what you want before you go in.
Agreed.
Final thoughts,
There's no
gentlemen?
magic answer. That's why it always feels so weird, because I mean, sometimes I think about doing like something where we tell you the nice answer for all the questions. It feel nice.
Yeah,
It feel nice.
It's very often we end up telling you what you already know.
Yeah.
I
And
don't
you're
think
smart
it's
enough,
necessarily the next answer. People they want
reassurance.
Mm-hmm.
Yeah.
And the best reassurance I know to give is
Yeah.
it is not
And they
it's
get
not
called
as hard as you think. Yeah, I know it's been rough. It's been rough, guys. There's a limit to how much one person can do. It's been rough.
We're working on it. We're working on it.
Yeah, you'll get that episode when you get that episode. Just trust me. It'll be good. Trust me.
Simplicity is best.
Yeah,
Okay.
like that.
Well, thank you, gentlemen, so very, very much for allowing us to pick your brains, for allowing us to get a taste of what it is like at the inside of earnings season.
I guess this was an episode. A half episode.
Tell us, any final thoughts, any final, last minute words to everybody that is out there that's been listening for the past 2 hours and 21 minutes?
Anybody that listens to earnings season know that Randy is the better person at doing this part. I don't very often have final thoughts. So Randy, go ahead, sir.
I don't have much either. I hope you enjoyed it. I didn't realize it was that long.
Yeah. So yeah, it was quite long. So I think we gave a lot of thoughts, and I think this time we gave enough thoughts. So we're really thankful for you guys having us running L.E.A.R.N Grow Invest Club. So, and thanks for the audience.
4 hours and 30 minutes.
Yeah, that was around.
Ran has also been on earnings season, so yes. I'm not surprised.
I'm still advocating for all three of you, but hey, that's a whole nother story.
We'll see what can happen.
Yeah.
We'll see what can happen.
Thank you so very, very much. From me personally, from L.E.A.R.N Grow Invest, and I'm sure from everybody who has been watching, who got their questions answered, and who has been dying to put a face to the name, because I know everybody knows Randy, but somebody actually said that they didn't know what Danai looked like.
Boy, by the time they know me.
The pandemic has been rough.
From home, man.
So thanks again, guys. And everybody, please remember to share this video. It's going to be up on YouTube for those who want to rewatch or those who want to share to other persons. And if anybody who wants to remember, we'll put the link for their earnings season and the everymickle.com.
All right.
So have a good night, guys.
Everybody bless you.
Night, guys.